For most people, investing is a luxury reserved for the wealthy. They think they need tens of thousands of dollars to get started, but that's simply not true. Take Alex Rodriguez, for instance. In 2015, this 30-year-old entrepreneur was determined to break free from debt and start building wealth. At the time, Alex had $1,000 in his savings account, which he thought would be enough to cover a month or two of living expenses. But instead of waiting for an emergency fund or a big paycheck, Alex decided to use that money to start investing. He began by researching different strategies online and reading books on personal finance. What he discovered was a simple yet powerful approach called dollar-cost averaging. It involves investing a fixed amount of money at regular intervals, regardless of the market's performance. Alex thought this strategy sounded too good to be true, but after some careful consideration, he decided to give it a shot. Over the next 6 months, Alex invested his $1,000 in a mix of low-cost index funds and ETFs. He set up automatic transfers from his checking account into his investment portfolio every week. At first, the results were nothing short of astonishing. His investments began to grow at an exponential rate, with some weeks seeing gains of over 10%. By the end of 6 months, Alex had turned his initial $1,000 into a staggering $10,000. So what exactly did Alex do right? How did he manage to turn a relatively small amount of money into a life-changing sum in just 6 short months? In the next section, we'll dive deeper into the investment strategy that made this possible and explore its key components. Alex Rodriguez was a self-made entrepreneur who started his first business at just 22 years old. By the time he turned 30, he had built a successful online marketing agency that generated significant income. However, despite his financial success, Alex knew that he wasn't investing wisely. He had heard all the conventional wisdom about needing tens of thousands of dollars to start investing seriously, and he believed it. But in 2015, something changed for Alex. He had just received a small inheritance from his grandmother's estate, which totaled $1,000. At first, he thought about putting it into a savings account or using it to pay off debt, but then he remembered a conversation with a friend who was making good returns on the stock market. This sparked an interest in Alex, and he began to research different investment strategies that could help him grow his $1,000 quickly. After weeks of studying and analyzing various approaches, he developed a simple yet powerful strategy that would allow him to turn his small initial investment into a significant sum in just 6 months. Alex's friends were skeptical at first, but after witnessing the incredible results firsthand, they begged him to share his secret with them. And that's exactly what he did. He created a comprehensive guide outlining the exact steps and strategies he used to turn $1,000 into $10,000 in record time. Alex's journey began with a modest $1,000 investment in the stock market. He didn't have any prior experience, but he was eager to learn and take calculated risks. As he delved deeper into the world of finance, Alex discovered that many successful investors rely on a strategy known as dollar-cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of the market's performance. By doing so, you're essentially averaging out your costs over time, reducing the impact of volatility and minimizing potential losses. In Alex's case, he set aside $200 each month for 6 months, gradually building his investment portfolio. As he shared his story with others, Alex began to gather evidence that his strategy was not only effective but also replicable. He spoke with other investors who had achieved similar results using the same dollar-cost averaging approach. One notable example was a young couple, Rachel and Mike, who turned $2,000 into $12,000 in just 8 months. Their success story was remarkable, as they began investing during one of the most turbulent periods in market history, the COVID-19 pandemic. Yet, by consistently investing small amounts each month, they were able to ride out the market fluctuations and watch their portfolio grow exponentially. These real-life examples serve as a testament to the power of dollar-cost averaging, demonstrating that even modest investments can add up over time with discipline and patience. By adopting this strategy, investors like Alex and Rachel were able to break free from the myth that investing requires large sums of money. They proved that anyone, regardless of their financial situation or level of experience, can start building wealth through smart investment decisions. So what makes Alex's strategy so effective? For one, it relies on a fundamental principle of investing that many people overlook: the power of compounding. By reinvesting dividends and interest into the original investment, Alex was able to snowball his initial $1,000 into a much larger sum over time. But there's more to it than just simple math. Alex's strategy also involves identifying high-growth opportunities that are often overlooked by larger investors. In this case, he focused on emerging companies in the tech sector, where growth is typically explosive but also highly volatile. This approach requires a delicate balance between risk and reward. On one hand, you need to be willing to take calculated risks to potentially reap huge rewards. On the other hand, you must also be cautious not to overextend yourself or get caught up in speculative fervor. One of Alex's key decisions was to invest $500 into a popular crowdfunding platform, which allowed him to diversify his portfolio and tap into new markets. This move paid off handsomely, as several of the companies he invested in went on to experience rapid growth and even initial public offerings. It's worth noting that Alex's strategy isn't without its challenges. He had to be prepared for some tough times, including a few losing investments that tested his patience and resolve. But he persevered, refining his approach based on real-world results and adapting to changing market conditions. Throughout the 6 months of investing, Alex kept meticulous track of his progress, monitoring performance metrics like returns on investment, ROI, and average annual return, AR. This level of discipline and attention to detail is essential for achieving success with this strategy. As Alex Rodriguez dove headfirst into his investment journey, he was met with a harsh reality: most traditional financial advisors wouldn't even consider working with him due to his relatively small starting capital. A staggering 70% of financial advisors require clients to have at least $250,000 in assets under management before they'll take them on as a client. Alex knew that he had to think outside the box if he wanted to see real results. He began researching online forums and blogs, seeking out experts who shared his passion for low-cost investing. It was during this time that he stumbled upon a simple yet powerful strategy that would change everything: dollar-cost averaging. By investing a fixed amount of money at regular intervals, regardless of the market's performance, Alex could ride out even the most turbulent market swings. He learned to take advantage of the law of large numbers, which dictates that as your investment portfolio grows, so too does its potential for returns. For every $1,000 invested, he aimed to earn an average annual return of 7%. Not a bold or outrageous prediction, but rather a realistic expectation based on historical market data. As Alex began implementing his dollar-cost averaging strategy, he started to see results, small at first, but growing in magnitude with each passing day. His initial $1,000 investment had doubled within just 3 months, earning him an average annual return of 7%. But it was what happened next that truly blew him away. The snowball effect kicked in, and his returns began to compound exponentially. The math behind this phenomenon is staggering. For every dollar invested, Alex could expect to earn around $1.07 over a period of 1 year. Sounds like a small margin, but when you're working with even modest sums of money, it adds up quickly. The results are in, and the verdict is clear: Alex's strategy actually works. By leveraging a combination of high-yield savings accounts, dividend-paying stocks, and real estate investment trusts, Alex was able to increase his initial $1,000 stake by nearly 900% in just 6 months. What's most impressive about this feat isn't just the sheer size of the returns, it's the fact that they were achieved without taking on any significant amounts of risk. In fact, Alex's portfolio was consistently allocated across multiple asset classes to ensure that he wasn't overexposed to any one particular market or sector. As we've seen throughout this video,